Hi, I'm Kerry Grinkmeyer with Best of Us Investors. I've been doing my YouTube channel since November of 2019. Before I got into it, I made the decision I wanted to be good at it. So I went and watched a lot of different people who do presentations about the stock market and investing, and I pretty much learned from them. There were several that I thought did an extremely good job. One of them was Meet Kevin. He goes into great depth and he does excellent work. Another I liked was George Gammon. He understands the Fed, he understands the Treasury, and he does a good job of teaching how they all interrelate, and you see the effects within the stock market. Another one was Joseph Hogue. I liked him because he has a broad range of knowledge. He's a CFA. I know what a CFA is. I'm a CFP. Much like a CFP, a CFA is a 3-year course where you have to display your abilities to understand financial analysts. So he's qualified in what he does. He recently reached out to me and said, we approach the investment markets differently. I'm a CFP. I've been trained. I've worked in the industry. He's worked in the industry. So he took one of my videos that I did for him and shared it with his audience. I want to do the same for him. And I've asked Joseph to do a video, give you some exposure, and then I've also asked him to give us a link to another video, and he did, and it's in the description, and it's top 5 fintech growth stocks from ARK Invest. I like that too because one of the other people I respect in this industry of YouTube and investing is ARK Invest. So be exposed now to Joseph. Again, put him on your favorites and hit subscribe to his channel, and I think you're going to benefit from this.
Hey, Best of Us Investors, Joseph Hogue here with the Bowtie Nation over on the Let's Talk Money channel, and I love the kind of futurist investing Kerry does here on your channel. In fact, it fits so well with something we're doing on Let's Talk Money, I wanted to share with you the 5 stocks every investor needs to buy in this big ideas long-term investing theme. For example, digital wallets could be a $4.6 trillion market by 2025, with each customer worth as much as 20 times the current valuation for leaders in the space. The market for deep learning and AI could add more to stocks than the internet and information technology combined. Those are just 2 of the life-changing themes in the ARK Invest Big Ideas report. 15 disruptive themes that are going to change the world over the next decade. And I love this report. 112 pages of research and market estimates into these 15 long-term investing trends, but not so much for suggestions on the actual stocks to buy around those themes. So in this video, I want to share with you the research into 5 of my favorite themes and the best stocks to buy in each. We're covering all 15 trends in a special series over on Let's Talk Money, so check that out, and I'd love to see you in the community. We're starting off strong here with my favorite theme of the group, digital wallets, a market worth as much as $4.6 trillion over the next few years. That's ARK's estimate for digital banking customers, with 230 million users in the US alone by 2025, and worth as much as $20,000 each to the platforms. Now, about half that valuation is through cross-selling customers into those personal finance products like insurance and credit, but another $9,400 is the untapped value in advertising and e-commerce. And what is really interesting here, though, is 2 companies that really dominate that space. PayPal's Venmo with about 70 million users and Square's Cash App with 60 million users. But given where these stocks trade at and their earnings, digital wallet customers for these companies may be valued as low as $250 each versus that $20,000 potential. And that brings us to our first stock to buy in my 5 favorite long-term investing themes. PayPal, ticker PYPL. Now the big upside surprise is in that digital wallets theme, but PayPal is always adding new services, from the QR code program that's putting it in that point of sale space to Venmo and crypto, which in less than 3 months after rolling it out, over 2/3 of PayPal users had used the crypto service. The company generated over $5 billion in free cash flow last year, an increase of 48% from the year before, and its payment volume growth in the fourth quarter was the highest on record. But again, the real potential here in that Venmo app and nearly 70 million users and accounting for just 17.5 billion of the company's $331 billion market cap. Even on a modest 10,000 valuation per user, the Venmo segment would add another $683 billion to the market cap, tripling the stock price. I want to get to those other 4 big investing trends, but I'll leave a link below in the video description to the full research and the other stocks I'm watching in that digital wallets theme. Ride-hailing and autonomous taxis could lower the cost of transportation for the first time in more than 90 years, reducing the cost per mile to nearly a third and changing how we think about owning a car. Think about this. If the cost of calling a self-driving taxi drops to a third of the price of owning your own car, and there's not just enough of these around that it takes less than a few minutes to pick you up, will you even need to own your own car in 5 years? ARK estimates that the autonomous ride-hailing trend could be a $190 billion opportunity for the platform providers alone by 2025, on top of the $40 billion for car makers and $5 billion for fleet owners. But even that is a drop in the bucket compared to the $230 billion in annual earnings potential by 2030. And here, Intel, ticker INTC, is my sleeper pick of the group. And the company acquired systems leader Mobileye in 2017 and has data sharing agreements already with Volkswagen, BMW, and Nissan. It's gathering 5 million miles of data every day and could help produce one of the most advanced autonomous systems. Mobileye is also developing its commercial fleet robotaxi technology for launch as early as next year that could enable a lot of the other trucking and transportation companies. And the market really isn't giving the company credit for any of this. Sales are expected at $73 billion this year and flat through 2023, trading for a price of just 3.6 times on a price-to-sales basis. So if we see any rebound in Intel's chip business or a surprise upside here in this theme, Intel could easily run much higher. We've got 3 more of those life-changing, disruptive trends to reveal, but I want to get your opinion on this. Which of the 5 in this video do you think are going to be the most significant over the next decade? So scroll down and let us know in the comments which of these trends do you think will affect our lives the most and which will drive the most for investor returns. Deep learning and artificial intelligence is building to that inflection point where it's enabling self-driving cars, accelerated research, and a lot of the trends that we're following. And the investment potential here is unbelievable. ARK estimates deep learning could add as much as $30 trillion to stock values over the next 15 to 20 years. That's more than the internet and information technology combined. This is everything from smart computers to self-driving and consumer apps, robotics that change our lives for the better, and uses we can't even imagine yet. And in that deep learning theme, I'm buying shares of Salesforce.com, ticker CRM, not only for its leadership in AI, but for many more of these long-term investing themes. CRM started as a customer relationship platform, but has really expanded into a conglomerate of cloud-based solutions in marketing, data analytics, and sales. In artificial intelligence, the company offers its Einstein AI software in the customer platform for dynamic pricing, a profit-optimizing system that is constantly learning. The company also has a lead in AI data analytics with its 2019 Tableau software acquisition and gets the remote messaging predictive software used by Slack when it closes that acquisition later this year. Next on our list of those long-term investing themes, virtual worlds, which ARK estimates could bring in revenue of up to $400 billion by 2025 in gaming, hardware, and apps. That's a 59% annual growth rate from last year. After years of false starts, it finally feels like augmented and virtual reality is starting to become commercially viable. Several companies have headsets available for a few $100s, and we're seeing software developed outside the gaming industry where it hit first. And one of the best pure plays in the space is Unity Software, ticker U, the $30 billion leader in creating and operating interactive 3D content for game developers, as well as business applications in automotive, construction, and film. Now, the company isn't expected to be profitable for at least a couple of years, even as revenue keeps growing at a double-digit pace. Now, shares are pricey here at 40 times on a price-to-sales basis, so this is definitely one where you have to believe in that long-term growth in the AR and the VR market opportunity and just give it time to grow into that valuation. One of the most interesting themes I'm watching, especially considering the boom in e-commerce last year, is drone delivery. Delivery costs add between 10 and 20% onto the price of e-commerce purchases, sometimes adding days to delivery time. It can cost $30 or more to FedEx a 5-pound package just 10 miles, and that's for next day delivery. Sending that same package same day by bike courier can cost $125. But drone delivery has reduced the cost to send that 5-pound package through Amazon Prime to almost nothing and requiring less time than bike messenger. Drones could deliver pharmaceuticals in under 10 minutes and at a fraction of the cost of mail delivery or driving there yourself. We saw how important e-commerce and delivery were last year, and it's a multi-decade trend that's just going to keep growing every single year. Right now, e-commerce is about 20% of total retail sales, but ARC estimates that by the year 2025, it could be as much as 45% of total sales, with 13% of that delivered by drone. Now that's $15 billion in drone delivery revenue, a number that could grow sevenfold by 2030. And it's probably not much of a surprise, but my favorite play here in drone deliveries is mega stock Amazon, ticker AMZN. Amazon booked shipping costs of $61 billion last year, up 60% from 2019. And while customers pay a lot of these, it's still a cost that, if it can be reduced, could go a long way to people buying more on the platform. The company made its first Prime Air delivery in 2016 and is expecting to deliver packages up to 5 pounds in 30 minutes or less with that service. That's up to 86% of the packages the company delivers, meaning this could be a huge change to Amazon's cost structure in the next few years. Now, like Intel, Amazon isn't a pure play on that drone delivery theme, but I also think it's reasonably valued here just on its base e-commerce business and has enough of these special project investments that if just one pays off, it could take the shares higher. Don't forget to check out that link below for those 5 fintech stocks that could mean 10 or 20 times return on your money. I want to thank Carrie again for the opportunity to talk to you today and be a part of that Best of Us community. And thank you for spending a part of your day to be here.